absolute goobers. Wow. Twin Dad, what up, man? Ladies and gentlemen, welcome back in the building. We are in the building. Let me tweet this out real quick. We'll get started. How are we all doing today, folks? Come on, let's hear about some of your guys' day. What'd y'all do? What'd y'all do? I think I can bump this to like 30 megabytes per second. Let's do this. Oh yeah. The stream quality is increasing. Oh yeah. Oh yeah. Oh yeah. Give me a second, guys. 1 second. All right, ladies and gentlemen. That I'm a professional streamer now. We also got this angle. This angle right here is going to be used for number one, clip farming. So whenever you guys get, riled up, whenever I want to do something funny, okay, or this is going to be teacher time, okay? And then this one is just going to be yapping, okay? No way. Sorry. On this one, I didn't add a mic, but we should be good across all of these now, so my bad. But yeah, so I thought I'd change some of those things for the better, just for your viewing experience. Like I said, my goal is to get a lot of you guys, you know, in a better experience, not hearing me do all this stuff all the time, you know, and having me take up half the screen was kind of annoying. Now we're gonna give it a few more minutes here, guys. You know, I don't want to start the stream 7 minutes in when no one's joined, so we'll give it a few more minutes while I roll my back out, because I am roll my back out, and because I just got done with boxing, so I'm kind of sore. I'm not gonna lie. Cables are not connected to camera mics or opposite. What? You make me you. Yeah, but one of the headaches with what I've been doing with all this streaming is, guys, I'm gonna be real, okay? I am not a content creator, okay? I suck at making content, all right? No one wants to hear me talk about anything. Well, that's not true. But with how content is nowadays and what people are willing to watch, it's more like brain rot. Like, they would rather see like someone holding a big stack of money than actually learn how to get that money. But I digress. So I've been figuring it out. I've gone out of my comfort zone a little bit. I am always a trader first. This content stuff I do for a hobby because I simply live by myself. Speaking of which, I have actually moved to a different apartment. So that's why you guys are seeing this new setup and why I haven't been on the streamer lately. But yeah, so I moved to a different apartment, so I'm here. And yeah, so we got plenty of stuff planned, some exciting stuff, of course. But it's been an absolute chaotic week of me moving, so that's how it is. Yeah, so the last place I was in, that is, I was renting a house and with other tenants, one other tenant, and so it was like renting, but I wanted just a little more privacy. I mean, it was like I got my own spaces and stuff, but you know, it's just living with other people. It's not like they were in my kitchen. Like, I had my own kitchen, but it was just interesting. I don't know. They were nice. But I'd rather have my own place, you know. And so I'm going to be doing this for a while. And yeah, so this rent actually ended up being cheaper too. And honestly, it's not more space, but it's just enough for me. I'm not single, but I live alone. I have my wonderful girlfriend, Stunt Queen. But yeah, it's a whole different experience, man. I'm fine with living by myself. It's awesome. In other news, ladies and gentlemen, we must pull up the SPY chart now that we are getting back into things here. So we got plenty of stuff to talk about today. All right. So let me get you guys the SPY chart here. What up, Teddy? How are you, man? Or woman? Man or woman? Hope you're doing well. All right, guys, ladies and gentlemen, we are officially 10 minutes in the stream. In 5 minutes, I will start to go over the SPY chart. We have lots to talk about. And hopefully, by me talking about it with you guys get a good idea of where we are at in the market. Most importantly, you find some trades with me and learn from what I'm doing. You know, all three of those things would be awesome for me. So if you could take notes during this, that would be awesome. Additionally, thank you, Rader, for AVGO. You know what, Teddy? I'm surprised you timed that correctly, because I'm going to be honest. A lot of people just didn't. You know, a lot of this stuff was tricky trades, man. It was, but yeah, the semiconductors all along, these guys were going to get hit from day one. I mean, these guys didn't stand a chance, but it was timing those shorts on the semiconductors that was so difficult. Unfortunately, there were some bigger ones. Like today, I shorted NVIDIA, but overall, AVGO was also a pretty good trade. It gapped up the most, but it was one of the biggest candles. But you're welcome, Teddy. Glad you're around, and I hope you stick around. as far as this other stuff, ladies and gentlemen, we are going to start going over the SPY. So first of all, let me see you guys type in chat. Let me know you're here. Type in, what should I make you guys type? All right, before we get started, we have to do our icebreaker question, okay? Now, I just got back from one of the best Mexican restaurants I've ever eaten at, okay? I had chips con queso. You know, I don't really have any muchachos. But, you know, if I had friends, I would definitely take them there. So drop down below what your favorite food joint is and why, okay? So right now I want you guys to type your favorite food joint in the comments. Let me know. What is your favorite food joint that you've eaten in the last 5 years? Let's see what you guys got. I like your new work environment. Thanks, Danny. I appreciate it, man. Kava. You like kava. You know what? I ate at Kava not like last year. Kava. I love Chipotle. I think southern food is amazing. Nothing gets me going more than tacos, man. I love a good taco. What's up, Rader? How are you, Ash? You can never go wrong with Olive Garden for the crew. You know, I like Olive Garden, but man, something about like I don't know. I got sick of like eating junk food for a while. It's not junk food, but you know what I mean, like American dine-in. It's you got to be in a certain mood. Caleros, Calleros, yeah, I can't speak Spanish. Wood Ranch. I don't even know what Wood Ranch is. You like Honey Grow? Carnitas Tacos. Oh, that's right. Carnita tacos are good. All right, guys. Without further ado, thank you for all of you that have showed up to the stream today. This is not going to be all night. We are not going to go more than, I'd say, an hour and a half is going to be where we kind of cut things off. We'll see, though. I'm never accurate with my times. But thank you so much for showing up, guys. We have some really nice things to talk about. And first, what I'm going to do is pull up some data for you guys. So just be patient with me while I leak my logins and everything like that. Just go ahead and, yep, leak it all. Yep, there you go. Let me get some different data here. Sorry. We'll go from the wastelands to the highway. See, this would have given me a heart attack, guys. Look at this, okay? I can't pull up Twitter on live because of this reason right here. You open Twitter, and this gave me a heart attack. Like, 5 dumbbell exercises for huge pecs. Like, this is why you can't open Twitter on stream, okay? Number 1 rule, if you guys ever become a streamer, do not open Twitter on stream, okay? Do me a favor. Awesome, man. Have a great day, Dad. Dad? I mean, fit twin. Okay, everyone, welcome to the stream. First of all, we need to talk about the SPY. Now, the SPY over the last few weeks has been very aggressive. Not just in its drop, but also in its recovery. I mean, just a few weeks ago, we were looking at a SPY from, you know, all the way up here at 563, down here to 510, 509. I mean, we dropped a significant amount, and we almost breached 500 in less than 10 trading days almost. I mean, this is August 5th, and up here was July 17th. So it was literally, you know, around 10 trading days that we got there to the bottom. Now, as far as what's happening now, we saw a recovery from August 5th. August 5th was actually the liquidation. When we were looking for a bottom, if you guys remember my thesis that we've talked about over the last few weeks, this was one of the key components of that thesis. Was we were trying to look for a liquidation. While I thought that we were in wave 4, it ended up being just straight up the bottom. So I was positioned correctly in trading that bounce, and then of course discussed that on stream with you guys. We did not think that we were going to cross above this 556. Now, where we started to change our thesis was actually when SPY actually crossed this right here. Whenever you think that you're in an Elliott wave, you can't technically cross the start of wave 2. And what we were thinking was that this was wave 2, right here. If this was going to be wave 2 or this was going to be wave 2, you can't cross this right here. So we were thinking, maybe we're wrong in that this isn't a 5-wave cycle, but rather a complex wave, which is just 3 waves down, 3 waves up, which is a corrective wave. But either way, we were saying, you know what? Anything over this area, 556, somewhere around here or here, is going to be a pretty big area for us to watch for when we try to update this thesis. And sure enough, we came up and we basically pushed right above this 556. Now, what's interesting, though, is that as we started to push above that 556, I continued to retain a bearish thesis. Now, why did I retain a bearish thesis, and why would I still be shorting when the markets looked like they were going to keep steaming higher? Well, there's a few different components that we're going to talk about today, not only the how-tos, but also what I saw so that you guys can learn how I approach the markets in the future. So the first thing that I talked about, and you guys may have seen this on X, was this right here. Let me get that original. I'm under replies, aren't I? Sorry. X is somewhat of a nightmare sometimes. Okay. So one thing that we're looking at right here was seasonals. And the seasonal outlook said that around the 19th of August, right, would be some sort of drop. The original thought was August 19th, because that seasonally is when you try to set a top and that you see a drop the next day. So I really honed in on this idea of an August 19th to August 20 short idea. We knew that weakness would come following the August 16th expiration. Why was that? Well, during a expiration date like this one right here, the August 16th expiration, although not a quad witching expiration, and again, for you guys that don't know, during the year, there are 4 major quad witching expirations, and the rest are just regular monthly expirations. If you don't know what expirations are because you're unfamiliar with options, the basic terminology is on that date is when the monthly options expire. Typically, why those are the most important rather than weeklies or anything like that is because they have the most money expiring. So when you have the 3rd Friday of every month, which is an expiration, a monthly expiration, you have the purple lines right here, which are quad witching, and the rest are regular monthly expirations. Now, regular monthly expirations, and screenshot that if you want to, market makers actually move the markets around the options market into those expirations. So into August 16th, we were predicting that some sort of move would happen. 2 different moves coming into that expiration. The first one, which starts 14 days before the major expiration, which the expiration was on August 16th, we said 14 days before we would expect some sort of significant drop. And as if on cue, the markets dropped. Following that, this is known as the shakeout phase. The shakeout phase is when you typically get some sort of fake out in that direction or a corrective move. Either way, it's a pivot. So what we saw here was actually a huge drop, but ultimately it got bought back up. That's the shakeout. It's to get as many people out of the market as possible. As we started to come back into it, there was this August 13th date. This marked the period of max pain. Okay? And the max pain phase is often the time, which is 2 to 3 days before the expiration, when you see a max pain move. Now, what is max pain? Is it down? Is it up? No, it can be either. Max pain can be either to the upside or the downside. Its goal is to just correct the imbalance. So right here, the imbalance was to the downside. Why was the imbalance down to the downside? Well, over the last expirations, we've had this massive put wall at 520. Now, of course, this changed because I can't show you the 816. Well, I technically could, but there was a massive put wall at 520. And at 520, this put wall, not this exact one, this is a different expiration for September, but this level was massive for August 16th. We started to push off of that level, and right here, boom, 520, people were still shorting. this is the max pain phase 3 days before. So we actually retained a bullish sentiment into August 16th, and we said we would save the short for after into August 19th and 20th. Guys, timing is everything. You have to understand that timing the markets is far more important than knowing which exactly the level you want to short off of. Sometimes it's not going to be that level you've been praying for. It's going to be slightly above it, but that timing is what matters. So why did I pick August 19th and 20th? Again, this was after expiration right here. This is typically when the seasonals start to drop around the 20th. Okay. Now, on top of that, there was been this defensive and value rotation. This was heading into, and this is on the 60-minute time frame, which takes around 3 to 4 days to resolve. And what I mean by resolve is complete. Why are rotations so important in the market? This tool right here shows where money is moving in the markets. Why is it important to know where money moves in the market? Because that is exactly not only a way to forecast the future moves of the market, but also to see where opportunity is and where you should spend your time as a trader. I always say this, there's 2 things you can waste in the markets: your time and your money. If you're wasting time, you are wasting money. And if you're wasting money, you're wasting your time. Okay? So we can't waste either. And so whether you're trading your favorite stock every day, which isn't a way to trade, which isn't a good way to find opportunity, you need to be, as a trader, an opportunist. You need to be looking around for where that opportunity is. Now, excuse me, I'm about to burp. All this Mexican is making me, excuse me. Okay, so as far as what this is right here, a defensive rotation, you have to remember that firms in the market, and I say this over and over again, I'm sorry if I'm repeating, but you guys need to drill this into your head. Firms in the market do not sell assets. Firms in the market only reallocate. Firms will take money from here and they will draw it and put it over here. They will never take profit. Remember this, that majority of firm money is client money. Okay? They're not some billion firm. They're not some multi-billion-dollar firm with their house money. No. Majority of these firms that are moving the markets, or at least investing in them, the market participants, these guys, the speculators, they are your mom and pops firms. They are your big hedge funds. And these hedge funds, etc., they are funded by clients. Clients want their damn money in the market. They don't want you to take their money out and take profit. No. So understanding that allocation, understanding that firms take money and they always on an automated basis. This isn't a fund manager making this decision. This is oftentimes a computer. They're taking money and they're moving it around. Understanding that principle right there is what's going to be so helpful in catching moves like this. When they rotate money out of growth and into defensives, that is an early sign that the markets are going to drop until demand for growth stocks are met again. So this was a kind of leading sign that we would see some sort of drop. Now, again, this takes around 3, 4, 5 days-ish to work out. And so in the current phase of where we were right then, it lined up when I posted this on, I forget when I posted this, August 15th or something. It lined up that the better short would likely be on the 19th or 20th, not actually on August 16th, which we actually pretty much nailed. Now, with that being said, we have to understand, okay, Rader, so we short on the 20th. You know, shorting on the 20th seemed to have been the right call. We had a lot of opportunities in here. Now, as the markets were chopping, we did see a drop today. And how far we go down is, going to be up for debate. But we need to know a part of a market drop. And you guys need to understand this, that whenever a market drops, that drop is not necessarily always going to be market-wide. It's not going to be, let's go short SPY. It's not going to be, let's go short QQQ. It's not going to be, let's go short, Apple. To find where this, when I say shorting opportunity, right, we have to understand that if we can waste money and time in the markets, we have to understand that we absolutely have to narrow down the stocks that are going to move the most in either direction. Once we find those stocks, that's how we know what to trade, okay? Now, with this market top right here, sure, we only went down, I don't know, how much are we down today? We only went down, we didn't even go down 1% today on SPY. But that doesn't mean that there wasn't significant downside opportunity already in the market. And there is still significant downside opportunity. Okay. So now that we're up to speed with where we are at as far as the 20th, we have to understand, okay, Rader, what was one of the leading signs also that really made you pull the trigger on taking some shorts and things like that? Well, number one, I shorted regional banks. If you guys were on the Rader Report this week, you would have seen that, well, regional banks was one of my favorite trades. And I'll kind of show you this right here. I apologize. Let me get some flow here. Boom, 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 boom. Okay, so when we talk about trades, one of the trades that we talked about this week was cool. It was this right here. Regional banks. Regional banks was one of the most sought after trades that I was actually looking at to short this market top. Now, I want you guys, before I continue, let me just say this. Nadin said, hey, awesome, man. I appreciate it. So for all you guys in chat right now, before I move on, I want you guys to type yes in chat if you guys are all caught up. If you guys are all caught up right now, I want you to type yes in chat, okay? Everyone here, just make sure you guys, let me hear what you guys got. Zach ditched us. Ash, average day for Zach. No. Yes, yes. Yes, yes. Rader, you're handsome. Rader, can you dunk? Rader, how tall are you? Guys, okay, I overused that joke, okay? Those comments don't exist. Okay. So now that you guys are all caught up here, what I want you guys to understand, oh God. Oh, sorry. I'm like a little sore here. Okay, so when we build that thesis, and I'm walking you guys through this because I want you to see my thinking in real time. And so before we continue, for educational purposes, since you guys want to learn, I'm going to show you a video. It is 4 minutes long, and I want you guys to listen to it. It's me talking, so basically it's the same stream. Okay, but what I want you guys to listen to is how I build this thesis, okay? And the reason I'm showing you guys this is because it's hard for me to convey how important this stuff is to you without showing you in real time how I work through these theses and how I work through this information to develop an idea, okay? And so this is me on, I don't know, August 15th, something like that. And maybe a few days after, I forget. But this was me discussing the ideas that coming into this major August 16th expiration, that we need to be careful. We need to be looking out for some ideas. And so what I want you to do is take note to how I kind of work through this stuff, and then we'll reconvene after, okay? So I'm going to put on my headphones, and we're going to watch this together, okay?
Yeah, absolutely.
Can you guys hear this? Can you guys hear my booming voice here?
You know what? Let's just talk about it.
Can you guys hear this? Type yes in chat. Type yes in chat if you think I'm handsome. Yes, yes, yes. Okay, cool, guys. Thanks.
Things first. Obviously, last week I came on here and I had the Trust Me Bro chart. We talked about a 520 bottom, and that came from this right here. If you want to share my screen, this was our little chart that we talked. Seasonal top, come down in. We thought that we get close to a 520 bottom. While that level had changed, I believe we have completed the 5-wave cycle, and it's quite evident across the options market, which is right here. We talked about the major put walls, and that in the 816 we would expect some sort of bottom around that 520. It ended up being closer to that 517, 515 area, which ultimately had the better trade. But 520 was kind of the basis of why we started to bottom and rocket from there. That was the massive imbalance, and we started to correct off of that. Now, moving forward, a few things we have to be cautious of. Number one, the seasonal. So this right here is just a seasonal chart, and typically we actually see a negative period quite consistently around the 16th of August, which is that major monthly expiration. Following when all this money expires on that monthly expiration, you typically see new rotations. And within the seasonal chart right here, you can see we tend to go down from the 19th all the way down to the 25th, 24th, somewhere around there. So that's kind of a sign that, hey, maybe we could have a drop next week. And while I'd like to say a seasonal chart is good to look at for a reference and a guide, it's not concrete evidence. So what is more of a concrete evidence that we can look at? Well, it's this right here. I don't know Oh, there it is. Okay, cool. So this is right here, the defensive rotations. I've talked about this a few times on the show before, but when firms start to rotate money into defensives and out of growth, which we were seeing yesterday and today, it is actually a very good sign that you should see some sort of drop within 3 to 4 days time, which coincidentally lines up with around the 19th or 20th being next week where we see a shorting opportunity. So if you guys are looking to open up longs right now, I would caution greatly because a lot of forces in the market are disagreeing with that, specifically the options market, and we tend to believe that they are rarely ever wrong. So with that being said, my last little point here is within the SPY chart. Now, this is my SPY chart that we actively have. You'll notice two yellow lines here. You'll notice one on the 13th and the 2nd of August. And then the 16th. Typically 2 weeks before a monthly expiration, not quad witching, but 2 weeks before a regular monthly expiration, you see what's called a shakeout phase. And what do you know? Almost to the script, the markets start to drop. But 99% of the time, this ends up being a fake out. Then 2 to 3 days in between before you get a max pain move. This corrects an imbalance. Since we have a move up, it is likely that we do see a continuation down because this is the max pain for the bears. So we're going to be looking at that going into next week. Short positions, and for those that want a good screenshot this. A little research can get you a little far. So this is 2021, and you can screenshot and see all those dates there. But that's it for me. That's my little perspective there. We can talk about the individual.
So that was basically what I just told you guys. But do you see how all these puzzle pieces fit together? So what I'm trying to convey to you guys is that it's not confluence. What is that word? Yeah, confluence. It's not confluence. It's not I need everything to align to the T. No, I'm seeing these factors. I'm seeing a defensive rotation. I'm seeing seasonals, right? And seasonals say, you know what? The weakness is probably after August 16th. And I'm using things like the put to call, the put to call ratio, which I'll show you in a second. But I'm building this idea of, number one, when is the opportunity present? And number two, until then, or when that opportunity arises, what is my trade? Okay, so take a listen to this.
Individual sectors, what I'm getting loose in, things like that. But, specific name, what I will say is technology short. Now, when I say technology short, we talk about dates a lot. I'm very specific with what dates I like to short because ultimately it's about timing the markets, not necessarily what level you always short off. I believe next week or into the 30th, you guys will see some news. The market's going to get nice and volatile. But one way to time this short, okay? Pull up the PC ratio. If you go look at my chart right now, the PC ratio, as it declines below 0.55, that is going to be an area where you want to be involved. The markets, when they do have that volatility spike to 60 and that crush back down, there's almost always another spike, just with fears that any sort of news, it's real sensitive after that. So just be watching that, guys. I believe it's going to be between around the 20th next week. So just be watching that. Make sure you guys aren't over long, exposed, buying.
Okay, so what I just talked about there is the PC, and that's what we're going to talk about right now. The put to call ratio. Now, give me my what is PC? I don't know why I had a brain development there. Okay. So right here, this is the put to call ratio. Okay. Now, what I want you guys to see is this right here. Jill says, curious why you showed shakeout chart from 2021 instead of 2022. Is there a reason? There is not a reason other than the sense that I had already shown the 2022 and 2023 chart on there. Specifically, well, not on there, but I wanted to give fresh data because, let me show you. So, okay, whoever, if you save this photo, if anyone here saved this photo, I'm banning you from chat. It's that simple. Okay, whoever saves this photo, I'm banning you. It's that straightforward. I mean, do not save that photo. Do not go back in my timeline and do that. I can't specifically see it. I think it was down here somewhere like eons ago. But we have talked about this before. Oh, here you go. So I had already shown 2022 before, or this is 2023, and then also some other years. So for the sake of for the sake of this law, this principle, I believe you are Miss. How do I say your first name? Can I call you Miss Lloyd? Is that your last name? Are you? I can't. Your profile picture is too small for me to read from here, just because my screen is massive. But okay, cool. So Miss Lloyd, as far as why I showed those dates, it was nothing more in particular other than the sense that I had already shown on my Twitter and everything, like 2022, 2023. The dates do not change though. So what I mean by that is every third Friday of a month, it might be a different day or a different date, but it's always the third Friday. Always the third Friday of every month. And then the quad witching dates, of course, those are separate months. Those are the same months every year. Outside of that, it is always the third Friday of every month. Okay, so those dates do not change. So it doesn't matter what year you do, but that's that. Now, as far as this right here, excuse me. As far as this right here, this is the put to call ratio. Now, down in the chat, did you short KRE? I shorted KRE, and I'll explain this in a second. As far as what you guys, I want you to say in chat, who here knows what the PC ratio is here? Okay? Who here knows what the PC ratio is? Type it down below. Let's see who the smart pants are. Rader, do you do one-on-one coaching? No, I do not do one-on-one. Next, within a few months, I'm going to start doing small groups, but I do not think one-on-ones are valuable at all. Unless if you're already putting the work in, like just one-on-one, it's so much better to be in a group environment. That's all I got to say. That's how I learned. I mean, I learned from my mentors that were in the Bay Area, and they had, Chris, Wes, Zach, all these guys that were just absolute monsters in the market. I learned things from every single one of them as they traded, not just one. That was when I was out there, though. Put to call ratio, too many calls, too many puts. Okay, cool. He's trying to slide in DMs for that one-on-one. Listen, if you want to one-on-one me in soccer, basketball, anything like that, absolutely down. No, I'm kidding. But this right here is the put to call ratio. Wrong camera, guys. This right here is the put to call ratio. So what this shows in the market is the puts to calls. Now, when it says put to call, you'll see to the right, the price is actually a ratio. So this is not a price. This is just a ratio. And what this is think about it like this. The put to call ratio. If puts are on top, right? Puts divided by calls. So the more calls that are in the market, or the bigger the denominator gets, the smaller the number gets. Okay? So when you get a really small number down here, this is where markets are considered extended. Or, in better terms, when you have a market, okay, let me put this into context. When a market is so deep in calls, they just plunge right head on into calls. It is a telling sign that there is going to be a corrective move soon. Why is that? Because it is easier for a market to drop if no one is hedging. It is impossible for a market to drop if everyone is hedged. Now, Rader, don't you use the word impossible, Rader. Why would you use the word impossible? You know, Rader, that impossible is not a term used in the markets. There is always a chance. Okay, Junior. It is a small enough chance to where it is absolutely almost a fundamental rule that if majority of participants in a market are hedged, or majority of a market is hedged, it is impossible, mechanically impossible, to crash the market unless if we are all eliminated. Why? Because the market mechanics, the mechanics of how the market works, is not up to the news that comes out. It is not up to, how could this affect the stock market in the future? No. Mechanically speaking, if there is enough puts in the market, it is nearly impossible for it to crash. Can it drop? Yes. But is it going to crash? No. So taking that same principle to the put to call ratio, okay? When you have a market that has too many calls or that everyone feels too comfortable and they're, you know what, yeah, I like more calls here. This down here means people are buying way more calls than puts, okay? And when you reach that level, not only are puts cheaper because the demand for calls have gotten so much greater, which gives us a better risk to reward, but also you're likely to see some sort of correction because it is easier to drop the market when less people are hedged. So oh man, look at that, Rader. August 20th, we got the PC correction, okay? Now I want you to listen to this video right here.
Yeah, absolutely. So quad witching, but so that's a technology short. We talk about dates a lot. I'm very specific with what dates I like to short because ultimately it's about timing the markets, not necessarily what level you always short off. I believe next week or into the 30th, you guys will see some news. The market's going to get nice and volatile, but one way to time is below ratio. That is going to be an area where you want to be involved. The markets, when they do have that volatility spike to 60 and that crush back down, there's almost always another spike, just with fears that any sort of news, it's real sensitive after that. So just be watching that, guys. I believe it's going to be between around the 20th.
All right. So that is to put to call ratio, okay? And that is why it's so important to have data like this at your disposal. Now, if you guys are absolute champions, let me show you something really freaking cool, okay? Number one, in our Discord, for you Discord members, if you have not already done this, okay, in the tools link channel, there is a link. You can get this chart directly copied onto your chart. Not only that, but all of Zach's charts, you know, the SPY chart, all these different trades, just by clicking that link, okay? So that's what you can do. So make sure if you guys are in the Discord, you can go download that. Additionally, for you Rader Report mofos, today, or yesterday rather, last night, I added this ability to where you can copy my charts directly onto yours. So literally just go click this link, save it, follow these instructions, whatever, and you will have my charts directly copied onto your charts, okay? And then you'll just go up here, change your layout, boom, and then my charts will be right on yours, okay? So pretty cool feature. Anyway, so hopefully we are all caught up today. So we saw that the 20th, although not, and let me reinforce this, the 20th was the top. Now you say that and you go, Rader, what? The 20th can't be the top if we went higher the next days. What you guys need to understand is that tops and bottoms are not actually, when we say tops and bottoms of a market, we're not referring to literally the bottom price. I've said this before and I'll say this again. Markets bottom, when markets bottom, there's always two bottoms. There is the technical bottom where everyone buys, and then there's the liquidation, which the liquidation majority of the times is absolutely untradeable. It happens so quick that no one's in. And the example of that is right here. This was the liquidation, and I actually think that this was the technical bottom based off of this response. But this right here is the liquidation. So this is untradeable. You cannot trade this to the upside. This was when everyone was still shorting, everyone piling shorts, and look, even if you longed, you would have got clapped. So the liquidations are extremely hard to trade. But the same thing with the top is that there is always going to be a technical top, and then you likely go for one more grab before actually dropping. Okay? That principle applies to everything. And so the 20th was the actual technical top. Not the actual top. Let me be very clear. It wasn't literally the top. But when you saw that PC ratio switch, that was the sign that the markets are going to get clapped. And you go, okay, well, Rader, that doesn't, you know, the markets didn't drop though. What was the trade? The trade was in other sectors. The trade was right here on banks. That morning when you gapped down, it hit that trigger. KRE had hedge flow. So the hedge trades right here off 55. Our game plan out was to kind of play the gap fill somewhere around there, but given that we dropped out there, we actually took this trade in the morning. So this was an awesome trade. I added to this in the morning on the 20th. What else was a trade? Well, we were looking at mega caps, so things like Google, right? So things like Google. If you go and you look at Google, it was actually the 20th was actually the top for Google. Okay? Now, when mofos, and let me show you guys something, and I'll catch up on these things right here. When you get mofos, now if you wonder what this message is about, when you get mofos like this, and again, I'm not starting beef, whatever, okay? When you get mofos like this guy that come in, they say, you were wrong. You know, you were 2 days off. I mean, look at how sad this is. And I'm serious when I say this. They just have absolutely no clue. Look at this. Yeah, you think it's okay? He was 2 days off. I was wrong. 2 days off. Guys, it's not about being right or... Oh, freaking this image scares me every time. Get it off my screen. Imagine. The reason that is just sad is because these people, if you go and hate on people and you spend all your time just hating and exposing and, you're wrong, these people are just coping for the fact that they don't actually trade and they don't actually have a grasp of financial markets. And this right here, if they would have done any bit of research, they would have seen that the 20th was the top, not for the indices. But for the actual trade, the technical top, not the actual top. And I say this again, the top, it was actually the top for things like Google. It was actually where you started to position in for things like, maybe not Meta, but definitely something like Netflix. Or if you look at Netflix on the 20th, this was the top for the mega caps. You look at something like Apple, right? Apple, this was your location to short, the 20th. It wasn't to buy the gap up on the 22nd and short. No. You had to have short on the 20th. Or else you would have missed the moves that were present in the market. And again, it wasn't the indices. It wasn't QQQ. It wasn't SPY. It wasn't the Dow. It was the individual names, the other smaller indices that you could play. Are we clear? Do you guys have more clarity with that? Let me catch up here. Sorry, there's a lot of things going. When it's at 0.7 or lower, sell-off, increase, those parts. Market maker needs to balance it. When you say market, do you mean the entire market, or are you looking at the PC ratio in a specific stock or index? So the PC just covers the indices. What I would say is that when we refer to, that's typically what I just use, the PC. There's also the PCE. It could be different depending on what brokerage you're looking at. There's some other that just covers certain parts of the market or things like that. I just look at the basic PC. We look at the overall market. When the PCE ratio becomes more balanced, is it generally safer than to start making calls? I'm not sure what you mean by that. If you're meaning like, do you start trading or what? Bro, what options are you looking at for next week? We'll get into that, Justin. Stick around, man. Rader watched you on TTV. Oh, yeah, I saw you in there, Wolf. Wolf, were you talking about my white t-shirt? Wait, no. You were talking about my legs. That's right. I saw a comment about my legs. I was laughing at that. Would you upload your YouTube lives to the Rader Report? Ricardo, I can, but I feel like most of the people who are on the Rader Report already watch me on YouTube anyways. I'm making some private videos, more private videos tonight. So we're gonna be uploading some tonight. I keep asking about PC ratios and max pain considerations. What is your questions about those? And Rader, you still think we have wave 5 left? No, that is out of the question. The wave 5 was kind of changed. The game plan was that we were longing wave 4, and wave 4 never ended, and it invalidated the L8 wave cycle, at least the 5 wave. So likely the better solution was that this was a complex corrective wave. So 3 legs down, 3 legs up. At the end of the day, that's the people who blindly follow trades and pray. Actually, technically, wittily, the 20th was not the top. Yeah. Abstract got me, bro. The real concern is all this is whether or not you grew injector or not you got new injectors. So Wolf, I actually found out my problems, okay? It wasn't the injectors, it's the tune. So the last tune it got, the previous owner, he tuned it with the exhaust. but the tune that was for the Whipple was just out of date or something. So I'm going to go get it dyno tuned. But what was weird is the tuners couldn't access my car because the previous tune had a lock on it, like a security lock. So I had to go buy like a $500 tuning device. And I'm going to have to plug it in the OBD slot. And I'll have to like set up and get the stock file out and everything. It's going to be a headache. But anyway, shouldn't be too hard. Bro was getting jumped because of his white t-shirt. Yeah. Mofos were saying, Rader, you know you can iron out your shirt, right? Guys, I live by myself, okay? What do you want me to do? Okay? You want me to get the iron board out and iron my white t-shirts out every day? No. They're going in the laundry. They're clean. They're coming out of the laundry, all right? I'm putting those on, all right? Oh, you guys are funny. All right. So hopefully, and I'm serious this time, hopefully you guys actually understand, though, what I'm getting at when I lecture you guys about this, is that when we talk about these tops, and you, again, you will never be able to explain to mofos like this, right? You will never be able to explain to these little goblins, hey, actually, the top was on the 22nd. You were wrong, Radar. These guys don't have positions in the market. They're not trading. They have no sweat, no game, they have absolutely zero money in the market, okay? These guys are not trading. They have absolutely no idea of what's going on. And I say that because when you go and you bicker about these things and you go push this hate towards other people, and this goes for you guys too, don't go be making fun of these guys who are obviously fake. There's no point in it. There's just no point in going to call out these people. They know inside their heart they are fake. But what I'm getting at here is that when we talk about these principles, that it's not about being right or wrong. It's about having that expectation that the 20th is the top. And as long as you trade it as the top, you move around that intelligently. You go and you short the mega caps because the mega caps get sold off first. Then you go and you short the trend leaders because the trend leaders get sold off the hardest. And you're shorting those names that have the hedge imbalances on them, like KRE. Understanding, by the time that short move happens, mofos are going to be so confused how you made money. People are going to be looking at my account and they're going, Rader, we're only down less than 1% today and you've already capitalized off this drop like you just banked, okay? Yes, because I've been preparing for this, because I set the expectation that 20th was the top. Was it actually the top? No, but you trade it as such and you find the names that are going to get rotated out of first, not the indices, not SPY, not QQQ. I did not trade SPY or QQQ, okay? But that's where all the little goblins want to get you caught up on, is that they want to say, oh, Rader, you're wrong, or oh, 1230 Wolf, you're wrong. No, you were right because you positioned correctly, okay? I can't say this enough, and that's why it doesn't bother me, but I do feel, I have empathy for these people because they don't, when you see this type of behavior, and especially in the retail community, one of the biggest poisons to the retail community is actually that they listen to me when I say this. A retail trader would rather be right in his prediction than to actually make money from his prediction. Every retail mofo on the internet who's claiming to have gains would rather be right that they called out this thing than to have a position in it. The people with positions are not here bickering about who is right or wrong because they are making money or losing money from their decisions. They don't give a flying, okay? This is what you have to do, okay? That lecture over. Now we are going to get into some trades here. All right, so type in yes if you guys are caught up. Type yes if you are, having a good day. Type yes if you think I'm wildly athletic. Type yes. Type yes if you think we can move on now. Yes. Yes. No. Okay. No. Okay. No. 3 times in a row. 4 times in a row from abstract. Yes. Yeah. Okay, so I'm going to assume all you yes was about the wildly athletic comment, but we are going to keep going. Roman said stop yapping. I hope you're doing well, man. Let's chat sometime. Awesome. Mark says how to become pro in option. Got to put in a lot of work, man. There's no ifs, ands, or buts. There's no cheat code. There's no secret. But I'll tell you, if you want a good shot, you can stick around here. All right, cool, guys. So with that being said, what we are going to do next is scan the option flow. Now, as we transition into our trade finding portion of this stream, we are going to be a little more focused on what is this? What is this? What is the screen? Oh, okay. Full port. Yep, that's exactly what I said. Okay, we got some flow to go through, don't we? When did we stream this week? I don't think we did. All right, we'll start from the most recent flow. Learn that from you, Rader. I appreciate that, Wolf. You know what? All right. So, before we get into our trade section finding of this stream, okay, what I'm going to do is I'm going to sit on the ground and roll out. What I want you guys to do is get some water, get a snack, and then we will reconvene in about 2 minutes. All right? You have time to go up, refill your water, get recharged, and go get some snacks, okay? Because I am going to NCS copyright free music. Nice. All right, let me stretch out 1 second. Stretching stream. All right, that's enough. Thank you for your patience. Sorry, I literally just worked out and ate. So if I sit down right after I work out and I don't stretch a little bit, like periodically, it's over, man. I can't even move the next day. All right, so thanks for your patience. Sorry. I really had to do that because my back was like killing me while I was sitting here. Anyway, so now it feels better. As far as this right here, we're going to be looking for some flow here. So this right here is interesting. This is an XRT call. This is about the second one I've seen on this. Excuse me, a put. It seems like this guy is betting quite big on this. When did he place this? The 22nd. He placed 830. It's too small for me. I don't really like that. Actually, that's next week, though. I don't think there's opportunity in that. Let's keep going. CCR. Oh, this is interesting. I think they have. Oh. Oh. Interesting. Do these guys have good option spreads? Let's take a look at this. I'm going to guess that these were either sold or... I think they moved this after he expires. Oh, hell no. The spreads on this are wild. Yeah, that stock's untradeable. Sometimes you just got to pass up on ideas altogether just because the idea is like the spreads on the contracts are so horrendously bad. Lots of moaning. Please, mods, ban Jared from the chat. This is outrageous. Did we seriously already go through all this flow? Weren't we looking at like a lot of this stuff? No, I don't think we did. Man, the flow here is trash. This one's interesting. Uh-oh, I'm seeing 2, so they likely have earnings, don't they? Nope. He got the 185 calls. He's so cooked. All right, let's quiz chat. Let's quiz chat. What's up, Sebastian? Hope you're doing well, man. Let's quiz chat right now. What on this screen, out of these orders right here, what on screen makes you raise an eyebrow? Okay? There's 2 tickers on this screen that make me go, oh. Let's see what chat says. Let's see what chat says. Let's see what chat says. Chat knows best. Chat knows best. Type it in. Type it in chat right now. Let's see who's been paying attention to the recent streams. DHI, cuz you said interesting. That is not 2 tickers. That's 1 ticker. Chat knows best. All right, start twerking. All right. So why did I make this guy mod? Jeremy says LEN. Okay, I need 2 tickers from you guys. I need 2 tickers. Why are we only naming 1 ticker? We need 2 tickers that chat can agree on here. It's my first stream. Oh, you got a lot of catching up to do. It's all right. Stick around. You'll learn something. So at this point, you've been talking about, yeah. No, listen, Jeremy, you are absolutely, you are in the right. That is the correct ticker. So what I'm going to say to you guys is this. When you're looking at option flow, again, I can't say this enough, guys. Option flow is not about following Nancy Postinky and other politicians. It's not about insider information. It's not about the big dogs. We got to look for the big monies flowing. Whoever says that is like, I don't even know. I don't want to be mean. But when these people start to just get all worked up over, You got to trade like the banks. You got to know where the big money's flowing. Guys, big money has punishments. So when you see certain orders, you can actually expect mechanical reactions from the underlying, the markets, the equity, because certain orders are in agreement. So, actually, the two tickers I was hoping you guys spotted was DHI. By the way, someone told me to stop burping and being loud on my stream. Someone legitimately DM'd me on Instagram the other day and said that. I'm in my house. If you don't like me being loud and burping, turn down the volume or don't watch the stream. Okay, anyway. As far as this goes right here, Sebastian says stop burping. Ban Sebastian. So as far as this right here, this is DHI. DHI, oh my gosh, it made me lose where I was. Great. Okay, right here. DHI and LEN are both home builders. Okay? Now you look at this and you go, Rader. Well, then that means it's actually a bullish trade because they're both calls. No. Believe it or not, this is actually a bearish trade. Okay? Or at least a bearish opportunity. Why? Okay, I'll show you why. So let's get this right here. We'll copy that. Okay. We will paste this in here. We're going to go to DHI. And we're going to go to this. Okay. And then what we're going to do here is then we're going to screenshot these two together. Okay, folks. So what we're going to do right here is understand this. All right. So when we go look at ITB, let's go look at ITB. Okay. So let me break down why this is. I'm kind of doing this on the fly, by the way, guys. So don't think this is pre-recorded or pre-streamed or pre-thought out because I'm literally doing this on the fly. I have not been home. Okay, so what we're going to do is we're going to compare indice performance from the 20th, which was the technical top, to now. Look at that. What do you guys see? What do you guys see? Come take a look-sees. Come take a look-sees. Okay. The number one performing asset from the technical top was ITB. Now, are we going to get a bullish trade later on from this order? Perhaps, but I'm thinking right now, since it is the leader, it's going to be sold off the hardest coming into the next few days. Okay. So based off of this order right here, this was placed on the 21st, and then the other one was placed here. We'll go to DHI. Sorry, these right here. So if we go to DHI, you can see these orders right here were placed on the 21st. Let's go to the 21st. You see, as soon as he placed this, you saw a bullish reaction. He bought at 180, instantly a big reaction. Excuse me, he bought at 185. So not too much of a reaction, but he is chilling at all-time highs. Okay, so he bought right here at, I think he did buy right at the high. Yeah. So this is all-time high, and he's buying right here. Now, check out LEN. He buys out of the money. 5 strikes out. Or it should be around there. I don't know if they do 2.5 cons, but right here. Quite a bit out. He buys at 180. Let's go check out what happened to LEN. LEN, he buys at 180. This barely kind of moves as well. So we have a potential trade here. It could continue to break out, but based off these calls right here, we might actually anticipate that this is going to be discounted first. And what I mean by that is we could play both sides of this trade. So given that LEN did not make a new high, and DHI, it did make a new high, but this is also considering this is one of the stronger names. I would actually bargain that this is marking the top for the home builders, at least for now. Again, this could change into next week. But at least for now, I'm thinking we could capture some short opportunity tomorrow. Okay, does that make sense to you guys? But I think the eventual trade could be that we buy the dip somewhere down here off of that for the high break on LEN. But right now, We have a whole week, and I'm going to bet that this actually does start to fade off. When you have two of these calls like this placed, it is the same idea. It is they waited for this big move to happen. Think, they waited for this ginormous candle. They waited for this entire move, and then they buy calls here. Why would they do that? Why would they go ahead and why would they wait that long? Why didn't they just buy calls earlier? This is likely to cause a mechanical reaction, actually to the downside on home builders. Okay. So that's that. Stop burping and stop being loud. My children are asleep. I could not believe that was a real person when he commented that. I thought he was trolling. I actually thought he was trolling when he commented that on my stream. So this is an idea that I'm actually going to be paying attention to. Specifics with this idea, again, it is 8:30 contracts. It is a little too early, but what I would do, the standard procedure for this is to go and look at the weakest names. Oh, look at that. So if we go and we look at URI, this is not directly a home builder, but this does move with the home builders. You can see that URI is one of the names that I typically do very well with. So if you guys remember from the Rader Report, excuse me, if you guys remember from the Rader Report, when I was talking about, again, most of you guys are a part of the Rader Report already, but let me show you this. By the way, the monthly report comes out this weekend. So right here, this was the home builders trade. I actually shorted URI because it was the weaker name within home builders. So, this PHM order came in, but I chose URI. Even though this order came in on PHM, it was actually URI that I wanted to see fall. So we took entry just above around 720, which was right around here, and we got this huge flush down, 400% on these contracts. The monthly trade worked out in like 2 seconds. But if you go and you compare this to the other home builders, they barely freaking dropped. So this was the correct name to play. So I will be definitely looking at URI, considering that this did not make a new high. I think it's better to shorter the weaker names here rather than the leaders within the leading sector. I know it sounds kind of weird, but industry, excuse me. That's what we're going to do. So I think between these, it's definitely going to be URI and LEN that's under consideration. Because DHI did make a new high, I do not necessarily want to see a rotation, or I don't want to take a trade necessarily on that because the likelihood of it being bought up is much greater. So that's that. So we'll be watching URI. Again, I think if you wanted to spot any particular level, just try to target a gap down tomorrow. If you do see a gap down tomorrow in the after hours, I would set a trigger level for like 7-11-31 right here and just say, if you gap down slightly, you push below that or just tag it, whatever, 7-11-31. That's going to be my trigger to the downside. And 700, something like that could be your target all the way down to 690. The expiration, again, this is going to be a 6:30 trade, but I would be looking for that tomorrow, even if we just day trade it. All right. So that is home builders. Now going back to the flow, we can look for different ideas, and you guys will notice, Rader, how did you come up with that conclusion if these are calls? That doesn't make any sense. Well, a lot of what I do is not going to make sense to you guys, but you will learn over time. Okay. Now, this is interesting. So he buys it the 20th. It goes up and he gets instantly smoked. I'm thinking next week there's an opportunity in technology for a bounce. I think what this order is saying is because this guy got clapped so hard, I think once you start to form a bottom, this is going to be a nice trigger. So what this order is basically telling me right here is that 8:30 is likely to be the just into it a few days before, maybe Thursday. That's going to be when you do that. Now, tomorrow is Jackson Hole. That doesn't really matter, though. Next week, okay. So next week is likely going to be when this plays out. But I believe that typically the day after you get a drop in XLK, 1 to 2 days after, and then you actually see a bullish continuation. So with that being said, I think this trade is going to be on watch. So be watching XLK into next week. Preferably, again, this is about timing, guys. So if Jackson holds today, typically the next 2 days after you see a drop. So that means around Wednesday to Friday of next week, you will get a long opportunity in technology. Now, again, this is XLK. So what you have to go find the most beaten down names in XLK for the trade. So you'd have to look at semiconductors for a bounce. You would have to look at probably NVIDIA, different names like Google, Apple, within big tech. Okay. So that is what this idea is telling us right here. So even though, again, guys, we're not trading XLK, I'm not an idiot. I know that there's better trades than XLK. XLK is just the ETF. So we're going to go find those better ones. And that's going to be likely on some of those other names. Now, there was some other monthlies, but there was like multi-leg flow, but I'm going to like actually gatekeep that for the monthly report because I want to talk about it there. But this is really interesting. GDX put 37.5. I don't know if I'm that interested in this. Yeah, no, I'm not really interested in that. It's an interesting order, but XLU I think is better than XLRE. Into the end of August, we're going to talk about this as well, but the seasonals say that we should likely short the Dow Jones. So I'll talk about it in a minute. Bullish energy. So check this out. This is kind of funny. So what you have here is you have a bearish trade on OIH. Okay, but this is for 8:30. This thing is already beaten to shit. Look at this. Why in the hell would this guy place this put right here? Why wouldn't he have shorted here, here? Why would he choose to short on 8:20? Okay, well this might have been me, but no, I get it. But he bought at 296. So this guy is still in the money, not by much though. But watch this, okay? What you're gonna have play out here on energy names is OIH especially. You're gonna see this rocket down, and then it's gonna absolutely go nuclear up. Okay, all of these guys who are baiting this short now, they're going to be punished. 202,000 is not a lot of money, but for 1 week it absolutely is. So for something like OIH, this is going to be punished. This OIH order is going to be punished. Now, is that actually the best trade out of energy? I don't think so. So I'll show you guys in a second. There's also this XOP name. So let me show you guys this. How is there this many orders? That is... It's literally stupid that they do that. Okay, check this out. This XOP order. So this guy is betting on 137, which is all the way up here. Do I think he can get 137 by tomorrow? Maybe, but I doubt it because he got such close expiration. I think that this... Okay, oh my God, I'm a genius. Look at this. Okay. This is such an ingenious plan. Okay, hear me out. I'm about to mastermind you guys so hard it's gonna be crazy. What you guys are gonna do is you guys are gonna go home. You are gonna buy a printout. Well, I'm gonna make a Rader Trader poster of me on my Mustang in a Speedo, and you guys are gonna put it above your wall, above your bed. So before you go to bed every night, you see Rader in a Speedo on his Mustang. Okay, anyway, okay, so let me put this idea into your head, okay? Now, again, I don't expect you guys to know this, okay? But this right here, all right? Okay, that's too small. I need to go back to this screen. This right here are two different orders, okay? Now, I'm gonna show the setups for these, all right? So let me side by side here. Okay, this is, I hate that TradingView does this. Okay. Okay. So, right here, you have OIH, okay? You have, let me show you. Let me just cook something up real quick, okay? So right here, you have OIH, okay? Both energy names, XOP, OIH. This XOP is a call, so he's betting on the upside for tomorrow. This right here is a put. He's betting on the downside. Now, this guy got the 287.5 strike. There's no way in hell this guy goes in the money, but we'll... So right here, this guy, his strike is right there, okay? So hear me out. He got this put way too late. He should have been shorting here. The market makers are balancing here. So when he shorts this late in the move, he will be punished. Think about that. He might catch the final leg, but it will reverse against him. So what I'm thinking is that OIH actually goes down tomorrow. It bounces up into next week and punishes this guy. With that same thesis, I think that this guy is going to expire worthless tomorrow, but then we will get an opportunity to long energy into next week. XOP, CVX. I think CVX is probably going to be the better long, but as of right now, we need one more day of pain in these energies, and then we're good to go. Okay, so these energy names right here, we are so close to the bottom. This flow right here, and I'm telling you guys right now, in 5 days' time, you are going to remember this conversation. You're going to go, how the hell did he know this was going to happen? Okay, sometimes you just got to know the flow, all right? This right here is what my game plan is. I think that we will see a liquidation on the energy names, this XOP order. And I think this order is intentional. I think maybe this might be the market maker. But as far as this right here, this is way too, this is pretty big damn order for 1 day expiration or 3 days. So, ooh, wait a minute. This changes. I thought this was placed today. Wait, this changes it. This changes the scenario a little bit. Okay, we're going to do two scenarios. Scenario number one is this one, this original one. And the trade idea behind this one would be long next week, but wait for a dip of this bottom. Wait for that liquidation, that quick, if it takes out that low right there, somewhere around 289, 290, this is going to be your long entry. Okay. Now, I'm not talking about literally on OIH. I'm talking about on CVX or XOP. I think these are the better trades. So when this happens, when this liquidation event on OIH happens and on the other energies, what I'm going to think about is this. I actually didn't know he bought this on the 20th. He bought this at 137. Oh, okay. So he's not actually down. I thought he bought it at the top here because that would have changed. He's already discounted, but he's not. So yeah, I think that we certainly do get some sort of move down. And the entry could be tomorrow. It could be that we liquidate in the morning and we start to rally up into Friday's close. In that case, this is still the trade. So my favorite two out of these names are CVX and XOP. Okay? So be watching these names long. Are we clear with this? Do you guys get how I got to this conclusion? These two orders, although completely separate, there's a call and there's a put. They both paint the same picture that this guy got way too big of an order, way too aggressive at the wrong time right here. I think he will be punished tomorrow, which makes sense that they're going to try to expire him worthless or at least significantly down. So they're going to wait till day of expiration, have that theta decay, clap them, and then they're going to move into tomorrow. Okay? I'm so smart. I'm sorry. This is the trade right here. This is the trade. You guys need to follow this. Okay? So we are bullish energy names after this move happens tomorrow. Hopefully. Hopefully it happens tomorrow. Fingers crossed. All right. You guys are about to witness the greatest trading clutch of all time. It's going to be the energy trade. Also, in case you guys didn't know, that actually matches. Over the last few weeks, I've been trying to time an energy long. You guys, if you should remember this energy flow, right? So over the last few weeks, we've been talking about this right here. Do you guys remember this for 8:30? These energy puts. I was wrong in my timing. I think I was trying to rush it too much. But do you guys notice how it comes down here and it starts to bottom? I think if we go down a little bit more and then we start to tag that 80, I think we're going to finally I said energy was a dip buy. I did not think it was going to be this aggressive and this quick. But I think given that these orders came in on the 14th, this is the same idea. So these are hedge trades to the downside. We are getting very close, ladies and gentlemen, to a big trade in energy. And I think it's going to happen tomorrow, that entry long. So make sure you guys are checking that out in the Discord. But how long our options should be? So again, it's just typically what opportunity you're trying to capture. If you're trying to hold for a bigger move, then yeah, just get one expiration after. That couldn't hurt. But it also depends on when the move actually happens. If we do not get this chop to the downside, or if we don't get some sort of strength into the close tomorrow, I'm not going to sit around and buy calls tomorrow. I'm going to wait till the next day and the next day. And if it never comes, it never comes. But what I'm just looking for is a liquidation to the low and then a reversal back up, and then I'll get calls. But yeah, I think the 8:30 is a fair expiration. You still got a week on those, I guess. I mean, you could go 6-9 as well in a lot of these, but all right. So that's a pretty fun trade. So energy is getting close, and again, I think given the context that we also have these XLE puts, these 88s, if you guys remember us talking about this, these are hedge trades, so you actually bet against them because they're building a wall at 88. The imbalance is now at 88, and so the market makers are likely to close it above there by 8:30. So I think the bullish trade is still intact on these names. Are you a full-time trader? Well, let me clarify what that means, because full-time is this like corny industry word. And again, I'm not being disrespectful to you at all, but the word full-time trader is kind of strange because it's just a way of like people trying to sell themselves that they do trading for a living. Yes, majority of my net worth is from trading. But is this my full-time job? Like, all I do is trade when I wake up? That's not realistic. Trading is a leverage of wealth. You have plenty of time during the day to just check on your positions once in a while, especially with how we trade. Now, people like on Trader TV, Sean and Neil, they've been doing this all their life. They as much as they are on the show, they're not day trading all day. They take breaks. There's plenty of time to do stuff. They also run a media company, so there you go. But as far as what I do, I work on the Rader Report. I work with institutions. I'm providing them data. I do a ton of group work, things like that. And of course, trading is my number one priority. But yeah, I think trading is, for anyone who's listening, trading is not an income. It's a leverage of wealth. And while it can make up majority of the money you bring in, it is not to be thought of as an income. You shouldn't be relying on trading to pay your monthly bills. That's just not what you should be doing. Again, I've said this over and over again. The only withdrawal I've ever done from my trading account is to buy my car. Okay, so don't plan on doing that stuff for a living. So you data analyst? You're a data analyst? No. No. I mean, I analyze data, but that's not my title. But I don't know. It's whatever. It's just orange. It's a color. It's a fruit. It's all the same thing. But yeah, that's the XOP right there. So we'll be looking at that. Other than that, I don't think there's too much other flow. I can take a look here. There was some multi-leg stuff. I don't want to share that with you guys. Yes, I'm absolutely. Oh yeah, here was this, by the way. So this matches the CVX trade. My bad. So this right here matches the CVX trade. So here is this. I totally forgot about this. This was a big boy call seller, so it's kind of funny. But 920, he sold these big calls. So 920 calls. I think honestly with energy, I think 920 calls are probably worth it more, because if the Dow Jones is going to get clapped and then the SPY is also going to start struggling again, I think energy is going to catch a major leg. That's one of the only defensives that hasn't really caught a leg recently. So I'm going to say that energy is definitely bullish, given that there's this huge put seller. We'll be watching this. Excuse me. But other than that, that's about it. Now, trades moving forward. What I want you guys to look at is actually going to be the Dow Jones. We are approaching a period where the Dow Jones, and I'm going to show you this right here. So your entry was today, technically on the Dow. The Dow aren't the best contracts, so you can look at around this. But let me go. So again, if you guys go to the Rader Report, don't forget that there's the seasonal tool as well. By the way, I just bought like another $4,000 a month data package, and we're going to be adding a ton of tools to Rader Report, by the way. Rader, you spend more than you make on the Rader Report? Yes. Oh, my bad. Okay. Here we go. Boom, baby. Look at this. So this right here is the seasonals. Now, if we compare the seasonals to SPY, the Dow Jones is actually like really bad. Like coming up, this thing gets absolutely murked. So the top is SPY, the bottom is the Dow Jones. The Dow Jones gets really freaking weak into September. Versus SPY, it takes a little more time. Here, we'll do never include 2008, excuse me. So this right here, the Dow Jones is really bad coming up into this late September. So I would be looking for possibly continuation. Now, seasonals say there is one more bounce. So maybe waiting towards the end of the month is probably better. But there was this flow trade that was a tag trade for 9.6. And this kind of matches the thesis that, okay, you know, he got these at 405. He's pretty clapped right now. So if you can expect some sort of chop into August next week a little bit, then potentially a trade there. But I'm definitely bullish Dow Jones names. I'll have to filter these. It will take me a few hours, but I will have to filter these more in depth to kind of get the best trades. But this right here is what we call a tag trade. We're actually following the direction of this order based off the criteria. And so I would be looking for this short. Now, you were technically supposed to trade off 410, so you're supposed to short off 410. That looks like that some of this already played out today, but it's likely to see another continuation tomorrow or something. So that's interesting. As far as gold, Mr. D is asking about gold. As far as gold, I haven't really made a trade on this recently, but honestly, one trade you're going to have to be looking at is silver. I think if there's, you know, when we talk about the recession trade, gold, silver, typically gold is the better one, but yeah, gold and silver have been quite different, and they're dependent on the dollar, of course. But I would say right now I don't really see any opportunity in gold as of now. I mean, long, short, up, down, who cares? It's played out most of the move, so I'm not interested in it at all. But I've been kind of looking at the silver for some sort of opportunity. I don't know quite yet. I mean, I do want to see it start to break out again, at least to 30, 29, something like that, but that's going to take a little bit. But I would look at silver more than gold right now. I think gold is going to have less opportunity for now, both long and short. Here goes my dream to trade with my laptop. Yeah. But yeah, anyway. So that's pretty much it. So the Dow Jones short, we're going to be looking at those into the end of September. Additionally, you're going to probably want to look at energy. Again, energy long. We have that energy long trade. So be looking at CVX. This one is going to be real interesting. CVX and then also XOP. I think these two are going to be very nice. What we're doing first is looking for a liquidation. What we're going to be looking for is a nice, ugly day. Another leg down, something like that. I think that's going to be the trigger for us long. If you look at this as well, this guy got a put. This guy got a put right here. Oh, that's literally not it, but hold on. What? I didn't save it. Okay, right here. Thought I heard someone knocking. I was like, I ain't expecting visitors. What was I even looking at? Oh, yeah. Boom, 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 boom. Look at this. Boom, 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 boom. So right here, what do you notice, guys? You see this huge volume drop, and then right here, I mean, this looks like, I mean, these peaks of volume are significantly dropping. I mean, you look at this, boom, boom. I mean, it's the volume is getting weaker. So I definitely think that's going to cause a liquidation. Makes sense. I think this guy's going to screw himself over. So the liquidation will be lower than the technical low, the technical bottom. So that principle is used in the macro. I would not all the time intraday and things are you going to see a two bottoms and a market bottom. But as far as this right here, yeah, I mean, this could absolutely be the technical bottom. You had some of the highest buying volume here. I think that's a technical bottom, and then you can expect a liquidation here, which makes sense. So this guy is going to force the markets higher, actually, at least the energy. So different names you can look at, XLE, XOP, but my favorites are XOP and CVX. So be watching those. Okay, guys. All right. Okay, ladies and gentlemen, we are going to move on to the lesson of the day segment of our streams. So we did find some trades. Remember, we're going to be looking at home builders short tomorrow and into next week. We're also going to be looking at the energy long. We're going to be looking at XLE, but my favorites are CVX and XOP. Then we are going to, after liquidation, of course, and then what we're going to do is we're also going to be looking at, what was the other trade? We did home builders. We did technology. So what we're actually going to be looking for as well is potentially a continuation in technology after a drop. Maybe into next week, we see a more significant bounce. The bias to close this week, guys, is actually under 555. So because this is where the major call wall is. Again, if you guys want free charts, you guys can go to the Rader Report. It's absolutely free to sign up and make an account. And what you'll get access to is my SPY chart that I post. I'm going to update this right after this stream, actually. So you'll get access to the SPY chart for the week. And this is where we kind of talk about all that stuff. But this week there was a SPY call. Excuse me, a call wall. Why is this not loading? Oh, it is. So there was major call walls right here at 555 and 550. Again, call walls, you're likely to see a balance close under this tomorrow. So expect chop. I wouldn't expect anything crazy tomorrow. I'm not going to be shorting out the wazoo. I've already made my money this week for shorting. But I think home builders definitely have an opportunity short tomorrow. And maybe energy if we get that liquidation to buy the dip. Okay. All right. Do you guys have any other questions? Any other questions before we start our lesson segment of this live stream? Also, if you guys have not already dropped a like on this stream, please go take your time to do so right now. It would help me out a lot. Thank you. Look at what Wes said. What did you mean when you said I'm about to mastermind you guys so hard right now? It's going to be crazy. Okay. This guy wrote it down too. This guy wrote that quote down, waited patiently for me to ask questions. This guy. Okay, in chat right now, I'm going to actually open up a poll. So we are going to do a poll for the lesson of the day. And we are going to do lesson of the day. Okay. I'm going to throw some bait answers in here so you guys actually pay attention and don't just click the damn top one. Zombie brain. Okay. The poll is now live in chat. Yo, can you check out Square? Yeah, I can. What's your trade idea on it? They were holding up a flamingo. You know, people make fun. So people think I have skinny legs. Okay. People think I have skinny legs. I weigh 155 and I'm 6 foot, so I am naturally skinny. Why is that camera off? Oh, the camera's dead. That's why. Anyway, people think I have skinny legs. Listen, I might be skinny, but I am a lifelong soccer player. My legs are shredded. Okay? Look at that lighting. I actually have shredded legs. I'm only 155. I'm 6 foot, but my legs are actually shredded. Now, it's just when I'm like moving around, they look skinny. But I've always been a soccer player, and I've always ran so much, so I can't be like Hulk Hogan. But I've got strong legs. But I am skinny. You know, I am skinny. I absolutely do not disagree with that. I just don't think people know like I don't know. I just don't look tall in my streams. I'm not that tall. I'm like 6 foot is not that tall, but I think people like expect like a fat American with bulky ass like college frat bro thighs, and I'm just not. I've always been a skinny kid, but I've always been strong. So, yeah. Anyway, it's funny. All right, let's go see this. So no twerk option again. Sigh. I guess I'll settle for option 4. Okay. Dang, this is like a crazy split. So you guys decided between market leaders and laggers and 4 ways to spot market top. So we're going to end this poll and we're going to do those 2 again. This will be the final round. So we will do choose 1. Okay, the poll is live, ladies and gentlemen. Go and vote right now. Go and vote right now. Watch. You guys are about to see Rader react to Rader, react to Rader, react to Rader. Rader is reacting to Rader. Now wait for another Rader to come up. You ready? Here's another Rader. Who wants another Rader? Raise your hand if you want another Rader. Rader is reacting to Rader, react to Rader, reacting to Rader, reacting to Rader. Oh, it's just growing. I love this. Look at this. Another Rader. Give me it. Yes. Give me another Rader. Give me one. Yes. The Matrix. Okay. That's enough of that. All right, let's go see what this is. Question: tell us about the Discord. You said 199 last stream, and the Discord it's I believe it's promo. So it's 200. But if you're actually serious about joining, and you join that day, I will give you a discount. I don't want to hand out these discount codes and people just not be joining, even with the discount. They're asking, what do I get? What do I get, guys? Commit or don't commit. I'll tell you this, my information we have in there from my mentors, from Zach to Wes to Chris, all these guys who raised me in the Bay Area. These guys know what they're talking about. We have professional data, academic material. And the reason we set that price so high to start with is because if you're in the streams, of course, you get rewarded because I have that 50% off code. And unless if you watch these streams, you don't know. But it's also to get people committed because I don't want money to be the barrier to why you're not learning trading and treating yourself right. But I'm not going to make it be the like, oh, let's get everyone in for free because that doesn't show any sort of commitment. So if it's a natural price barrier, and I purposely do that because I want people who are actually willing to show up for the money that they pay rather than a $10 subscription that you forget about and then cancel 6 months later. Okay. I don't get paid for the Discord. I've never received money from the Discord. We take that money, we put it in a Stripe account, and it pays for the data for the server. It's all about commitment, baby. All right, let's go see what won the poll. God dang, that was a close poll. So both times, though, 4 ways to spot a market bottom was the top or bottom was the lesson of the day. So that's actually what we're going to do. So we will get some materials prepared here. On the way, son, on the highway. All we know, we go from the wastelands to the highways. I apologize, guys. 1 second. It's not going to be 4 ways. We might actually do a bunch of ways, but I'm going to do a bunch here. So just give me a second to work this out. You're DMing me later on IG. Do so. And I encourage and I extend this invite to everyone, whether you're on the Rader Report or not. And I will say this right now, that for those that are in the Rader Report, I can guarantee you that majority of the people who have the Rader Report in here are also in the Discord. They go together, and I'm going to be building out this Rader Report. It's going to be tools. I literally just bought an API. It's like $6,000 a month, and I'm going to be dumping tools and data in here. So that is the level of commitment that I want to build this stuff to. But as far as the Discord, I'll hop on a call with you. I'll get you oriented, and we'll get you on the materials ASAP. But again, also if you guys, and I'm serious about this, if you guys actually want an online terminal with like the seasonal expectations, everything like that, the Rader Report is it. I literally to the day lay out the seasonal expectations, like the 13th to the 23rd. Expect to pop higher followed by a drop. Who could have guessed? These are the expectations. Okay. What to short? Oh, look at that. Home builders. Oh, look at that. DRR. It's stuff that we've been talking about. It's almost like these flow orders we've been reading about DHI and LEN are all on my Rader Report. I typed this out like a month ago too, by the way. But you also get the access to the monthly report, which is the longer trade ideas. It's like the thesis for the entire month. as well as the archive to it. So you can actually go look at my last ones. But also you get my charts, right? You can literally copy these charts onto yours. So if you click this link and press save, follow the instructions, you will get my charts saved on yours. So like I have Zach's charts saved on mine, so I can see Zach's charts. You just have to do it every week, which is kind of annoying, but still it's worth it. And then also the seasonal tool. So anyway, I'm going to be adding a bunch of stuff to this. But additionally, the Discord is kind of crazy. You get everything in there. There's the tools link, the PDFs, things like that, which is all great. Okay. Okay, so we are about to start our lesson. So what I'm going to do here is I am going to quickly write down, just so I can give you guys the absolute best lesson possible. I want these ideas organized in my head before I start talking about them, or else I'm gonna ramble. Okay, so give me just 1 second. Let me get a pen. Okay, so we're gonna do the rotations. What you guys are actually helping me out with right now is making a YouTube video. So I'm going to make this a YouTube video as well. So tackle two birds with one stone here. And sorry for those that are getting impatient and have TikTok brain, but I'm focusing. I really, really want to make sure I talk about this in the proper limelight, whatever that saying is. Okay. Jim Cramer. You know what? The Jim Cramer, is it monthly or annual? It's monthly. The Jim Cramer slander needs to stop. Jim Cramer is actually goated. Y'all been sleeping on Jim. Hey, where the haters been? All this Jim Cramer buys Facebook. Hey, where's the Jim Cramer haters at? The ETF, the inverse Cramer ETF, got delisted because it got ran to the zero. It got ran into the ground. Jim Cramer actually been killing it recently. No one's been talking about inverse recently. And I'll tell you why. Because Jim Cramer's actually been a goat. He's actually goated. Rader, I don't think that's... Shut up. Just shut up. Listen, I ain't here to be your grandma. I ain't some grandma with wisdom to talk about which proper saying to say, okay? It's tackle two birds with one stone, okay? I'm saying that from now on. He reads the abstract report. He does. Okay, guys, everyone. Right now, we are going to be talking about the 5 best ways. How many is this? Real quick. 1, 2, 3, 4, 5. Oh boy, you guys are in for a treat. Right now, we're going to be talking, today at least, we're going to be talking about the 5 best ways to spot a market top or a market bottom in the markets. Right now, the SPY is tanking, right? Markets have been dropping. The VIX hit 60 in the last month, so we need to be able to identify when these things can happen ahead of time before they happen. So without further ado, we are going to talk about the 5 best ways to spot a top or bottom in the market. Okay, there you go. Look at that. That's a YouTube intro right there. Boom. Look at that. You guys are so handsome. Okay. Okay. With that being said, one of the best ways, the first way, to spot a market top or bottom has been something that we've talked about a lot before, and that is the RRG charts. Now, the RRG charts, what are they important and why are they important and why do they actually provide value to us as traders in the markets? Well, first of all, as we've explained many times before, that the RRG charts show their visual representation of the market's rotations, right? Why would we want to see money rotating in the markets? Well, again, firms do not take money out of the market very often. It is 99% of the time a reallocation. It is taking clients' money, which they want to be in the market, and they're taking it from one asset and they're putting it to others during certain times of the year, during certain moves that happen in the market via an algorithm or computer. Okay, and so if we can spot these certain rotations, then we can spot what the markets are likely to do moving forward. Now, on the RRG charts right now, I have several different things. If you've never seen this chart before, you should know that the top left is improving, top right is leading, the bottom right is weakening, the bottom left is lagging. Lagging to what? Improving to what? Well, there is a benchmark. All of these sectors in the S&P 500 are being compared to the overall market. Why is that important? Well, if you're comparing performance of one thing to another, that's a way to gauge which one is being rotated into. Because if one starts to outperform the other, the benchmark, the overall markets, if one sector is outperforming the overall markets, that means that money is flowing into it. And so when we see something going into improving, this is kind of the golden area to warn us that there is a rotation forming. Now, what is the key here? Because there could be just one over here. There could be a bunch of tickers over here. What we want to see is unification in the rotations, right? What does that mean? We want to see that all the firms, all the money is in agreement of where it's going and where it's coming out of, because that's an early sign that there is going to be a bigger reversal to come, both to the bottom and to the upside and to the downside. Okay, so what is that unification? What is that buddy system? Well, we have to know how the sectors of the market, and you can just do this with the sectors on the RG chart tool. I'm on the 60-minute, and you can just select S&P 500 sectors. Okay, now when we want to see unification, what are we looking at? Well, you guys should know that certain sectors are kind of grouped in their own little categories. If I say growth stocks or growth sectors, you should not be telling me consumer staples, right? The consumer staple names being like Walmart and, the everyday essential needs. Those aren't growth stocks, okay? So when I say growth, I'm referring to technology, consumer discretionaries, your Teslas, and your communication stocks like Meta and Netflix. With that being said, those ETFs are over here. What do you notice? They are grouping up. They are performing very similar. Now you can see XLC is its own outlier, but that's a relatively new ETF. So what's more important is just XLY and XLK are somewhat together. Okay. So when these start to group up and they're both heading in the same general direction on this side, going from leading to weakening, that is the key sign that we are forming some sort of rotation in the market. Now, what about the other sectors, right? So this is kind of the golden zone that we want to see things rotating into. On the other side of the market here, we want to be looking at this right here. Okay, now I'm going to actually change this to the color green so you guys know these are growth. And then over here, you have kind of your defensive and value. Okay, so this right here is kind of the golden zone you want to be looking for these stocks to unite in. And then over here, you also want to be looking for these to unite just above that lagging and into improving. All right. So over here, what you'll notice is these are actually your defensive and value sectors. Now, utilities, staples, industrials, materials, energy, banks, these are all considered defensive and value names. Okay. Why is that? Well, these are the less risky. They're lower beta, which means they have lower ranges. And therefore, that's more attractive to investors when the markets start to get volatile. Algorithms are triggered to rotate money into less risky. Now, it's not actually less risky, but they are less risky stocks. That's how I want you to think about it. It's caution. It's caution stocks. Okay? So when you see defensives over here and you see growth over here heading down, so when defensives are going up like this and into this improving in this golden box, and then you have growth going down like here, this is a sign that there is going to be a drop soon. Now, it depends on what time frame you are on. I am currently sitting on the 60-minute time frame. Typically speaking, the 60-minute time frame takes around 3 to 5 days to do a full rotation. What that means is, and when I say 60-minute time frame, each dot, the line between each dot represents 60 minutes, okay, 1 hour. So we can imagine that the majority of the rotations takes anywhere from 3 to 5 days to fully complete, all right? So with that in mind, 3 to 5 days around there is going to be when we can expect, as of now, a drop in the markets based off this image. If you wanted to see a market pump, the same is true except flipped. So what you would want to see is you would want to see growth on one side with, of course, here, we'll do it over here. You want to see growth on one side with defensives on the other side. Now, while this isn't always true, it is a really good sign that you'll start to see a market pop soon. So right here, you do have kind of a shaky rotation. So you'll see not all the time is there information that's valuable to us. But you can see as we started to increase here, you saw a clear division between defensives and value. So here, defensives and growth. You had growth up here. Likely more upside here. But towards this bottom, I guess, is a better, cleaner rotation. So right here, you have technology. So this was right at the bottom, literally right at the bottom of this move. On a bigger scale bottom, you had technology growth over here. We want growth over here if we're trying to predict a long. Again, 3 to 5 days, expect a continuation. Growth over here, and then defensives over here. And the same principle applies that and you guys might be wondering, well, why is XLY and XLC over here? Those are both growth sectors. All that matters is really tech. Tech makes up like 90% of the growth stocks in the market, okay? So right here, tech is up here, and then you also see all these other stocks buddying up, the defensive and value names. These are going to be your defensive and value stocks getting rotated out of and into growth. That is a sign that there's likely to be continuation in the markets as algorithms are triggered to rotate money from less risky, again in quotations, into more growth, higher beta, more risk, which in turn increases markets. Okay? So that is how you predict tops of markets. So again, if you are on the 60-minute, it's within a 3 to 5 day time frame. And you can see that when we did see this rotation, this was around the 16th of August. 3 to 5 days is around the 21st or the 20th. If we go to the markets, this is what I've been saying for a while now. You can see that the top, not the actual top, but the technical top was set on the 20th, and that was where all that selling pressure came in. Okay? Now, a few discrepancies before we move on. The 60-minute, expect 3 to 5 days. The 15-minute, you can actually catch some day trades within 6 hours, around 6 hours to maybe a day to play out entirely. But the 15-minute, you can expect to actually see day trades on, which is what I use. So the 15-minute, if you do see a defensive rotation on it, it likely means there's going to be chop moving forward or some sort of drop. And you can see right here, this is a perfect example. All the defensive and value names here. And again, predicting the top, all the defensive value names here, and you have the growth names over here, XOK, XOY. This is unification. This shows us they are rotating out of growth and into defensive. What happened directly after price? It was just chop. Look over here. Chop. It's all chop. So at the very minimum, if you are expecting a slowdown or some sort of top in the market, you are going to be, of course, looking at the time frame ultimately. That judges how big of a move you can expect. But here on the daily, on the 15-minute, the minimum of a defensive rotation, the minimum is you get some sort of chop in the market, all right? Almost every time. A chop or a drop. Cool. So that is how you can predict tops with the RRG charts. Are we all cleared in this chat right now? Spam yes if you think I would make a good husband. Spam yes if you are clear on all of this stuff here. And by being husband, I am not referring to Miss Lloyd. For all you immature mofos in the chat, I already have a girlfriend. Do not, yes. Okay, see, abstract, there we go. I convinced Rader Report is sick. I'm subscribing now. Awesome. Hope you have, hope you find some value in that. I'm adding more and more to it every single day. Yes, clear. Yes, yes, yes. All right. So hopefully we take notes on this. Do you guys know that I drained my vocal cords for you guys? Raider, stop yelling on stream. It's immature. Please sit there, back straight, and be good. For my viewing pleasure. Okay, for lore, for you guys that are new here, there was a guy here that showed up a few weeks ago. I don't know, it might have been a few months ago. The guy told me, he commented on my stream, that I need to stop yelling and stop being annoying because he can't watch me anymore because he fears I'm going to wake his house up. Brother, there's a thing called a volume button. Oh. Anyway, it was a adult in a child. It was a child in an adult's body. Very immature. I'm just gonna say I cannot believe people like that are real. Like grown men complaining about the volume of my streams. Brother, turn it down. God. And even playing the victim card of saying I'm going to wake your entire house up. That is crazy, man. I mean, dedication, if you guys do listen to me on max volume on a speaker, hey, that's some dedication right there. But that's it. My cat just jumped. See, Danielle, hopefully it's one of the two. I can get pretty loud, but stop, abstract. Okay, so that is one way that we do that. Now, we're going to check that off the list here, okay? So at the bare minimum, what I want you guys to know is whether you're looking at it on the 60-minute or whether you're looking at it at the 60-minute or the 15-minute, understand that a defensive value, the rotations are live updated. I mean, this is every 50 minutes and every 60 minute. Based off of how this is updated, right? If you see a defensive on the 15-minute, that is a sign to start trimming your long positions if the market is rallying. It's a sign of chop is to come. So if you want to use this tool, there's not always clean rotations. Like you'll see some mornings it looks like this. This is not information we can use. But when you do see that unification of a defensive rotation, depending on where it was, right? If it's improving and out of growth over here, that is a sign that a chop or drop is coming based off of that time frame you're looking at. So the 15-minute, expect it to happen today or tomorrow, right? Into the end of the day. But if you're looking at the 60-minute, it's probably within 3 to 5 days that this will work out, okay? That you can expect a chop into that or an eventual drop, all right? I woke up my neighborhood for you. All right, yep, valid. All right, so the next way, that's number one. I promise we'll go through the other ones pretty fast. The second best way to predict a market top is to subscribe to the Rader Report because I always tell you when the market top's going to be. Pause. Okay. I'm actually going to be serious. So the second best way to predict a market top in the markets is actually going to be seasonals. Now, a lot of people, and especially noob traders, they kind of discount, oh, I wasn't recording this entire time. No, it's all right. I mean, this stream is recorded anyway. So anyway, one of the best ways that you can, I guess, consider a market top, that you know when a market top is coming, is actually going to be seasonals. The seasonals, if you guys are unaware, is just referring to when price action tendencies around certain times of the year. So a lot of retail traders, they don't actually know about that. Markets move typically the same way, and they make the same sort of price action during the same time almost every single year, almost to an exact day to some extent. Now, why would that be? Well, of course, you have to understand from a more boring macro picture that there's certain things, certain times, both on the tax calendar, but also when we consider, the sentiment of the markets. Every March, you typically get a huge bearish move into the March earnings, and the earnings typically, tech earnings, things like that, typically boost it up and you get a huge rally. Okay, that happens almost every year that we bottom in March. If you don't believe me, let's go check out the price charts. Oh, look, Rader, if we go to last March, where was March? February, March. Okay, you look at the end of March. Well, okay, that was a bad example because we already were in all-time highs. But when you go from a market retracement here, look at this. March 17th in 2023, bottom. Okay, now let's go to 2022. Where's March? There is March right here. March, bottomed. So you typically bottom in March. And again, March, bottom. So you typically form this sort of bottom into late March. That happens almost every single year. And likewise, you also see a top happen almost every single year into the opening of August, which we absolutely saw with an absolute a butchering of the markets that we had at the top here from the war news and all this. Now you might be asking, well, wait a minute. I thought it was the war news that dropped this all the way. You're right. But it is not a coincidence that all this bad news shows up at the same time every year. So the spotting seasonals, what I like to do is have a seasonal tool. Of course, this is on the Rader Report. A lot of places will charge you a lot of money. Season AX charges you upwards of probably like $125 a month for this data. But this is including the Rader Report. I digress. How you want to read this is you can always, with seasonals, there's different ways of looking at seasonal expectations. A lot of people like to compare election years only. A lot of people like to compare, what do the markets do during non-election years, things like that. And with seasonals, you always want to make sure that you have an idea based off the current, like the most accurate seasonals to where you are today. So since this is an election year, what you can do is certainly go look, you can use this tool, but overall, majority of basic seasonal tools work. But what you can do is you can go to the seasonal section on the Rader Report, and I actually include the election chart here. So this is the election seasonal chart for the month of August. And you can typically see that within the first few days, you see a lot of weakness. Again, the dotted lines are the election. You see weakness in the first few days, but ultimately you start to see some strength towards the end of the month. Okay, so that's typically how that goes. But you can use this tool. You can just use a basic seasonal. You don't have to worry. That doesn't really change the outcome of a lot of this. Now, how you want to look at a seasonal chart is this. You do not want to care about all this chop here, okay? You do not want to care about these little discrepancies. What you want to care about is, number one, that your seasonal chart is not going to 2008 or before. We disclude 2008 from our seasonal research because 2008 marked not only a huge mechanical change for the markets in the processes, but also huge policy changes. So the market dynamics were not the same from 2008 to it is now. That's why I never include 2008 in my analysis. So technically, you can go up to 15 years now since we are in 2024. With that being said, what you could do is, what you want to do is you don't want to look at these little tiny bumps. You don't want to get an idea from that. What you want to see is the very clear and obvious trends. And you want to understand that, majority of the biggest moves that come to SPY are often during, late June. You typically see a big pump into July. July is one of the most bullish months of the year. Then you want to see a big steep increase into the end of May. That's typically a thing that you see. Also a huge bottom in March, right? We typically get a bottom in late March, and we also get a bottom in mid to late October. You also get weakness from the top of August down to September and into October. And you also typically get the Santa Claus rally, right? This is called the Santa Claus rally into the end of December. This is the Santa Claus rally. So that's what these seasonals are. Excuse me. So you want to look at these major points, these major turning points in the market, and you want to have an idea. Coming up, we're coming up to an area which is typically bullish into the end of August. So actually, my thesis has remained bullish into this end of this month. Okay. All right. So that is how you use seasonal tools. Now, how would I specifically go about trading the seasonal tools to create a bottom? Number one, you have to understand that the seasonal is not to be taken on that exact date. You don't go and physically look at the top and go July 29th, I'm shorting. No. Typically, how things work is if you're trying to trade a bottom, you have to be slightly early. You always have to be slightly early if you want to play this macro trade. So even though it says the seasonal bottom is on the 24th, realistically, you should be longing later than that or even before that, just a few days. Okay, so you always want to front run the seasonals. And this goes with any ticker, right? And I'll show you what I mean by that is if you go to something like XLE, you can see the XLE seasonals. You typically have a lot of strength from the 29th all the way to June 9th, okay? But that doesn't mean going long on the 29th. That means probably get in around the 25th or 22nd, somewhere around there. And if we go and we pull up a chart of XLE and we go to last year, you can see that into the 29th, we were expecting a breakout. But if you entered on the 25th, 24th, somewhere around there, this was where you were supposed to enter. You were supposed to enter a few days before. Because if you waited on the 29th, you would have missed half the breakout already. Additionally, if you go to here, so you always have to position early into these things. So if we go to here, you can see again, if you did the strength comes in on the 29th technically, but if you were to position earlier, like a few days before, 23rd, 22nd, 24th, whatever, this is where majority of the move comes in. If you entered on the 29th, you would have literally gotten a quarter of the move. All right. So when it comes to seasonals, you have to understand that if you're taking a macro trade, you want to be positioned at least, anywhere within a week before that seasonal actually starts. So for example, right here, if we wanted to short something like, or let's say we wanted to catch a bounce in one trade that we were looking at was CVX. So CVX, we're actually anticipating a bounce on CVX. The seasonals say that we should receive a bounce here. My bet is that we get that bounce, so entering tomorrow into late tomorrow after some sort of liquidation is probably the best move, because I don't want to wait till 25th is when the seasonal actually starts. No. I want to be a few days early, all right? Because if not, I'm going to miss this move. All right? So hopefully you guys understand that. So that is seasonals, all right? Is everyone clear on that? Type yes in the chat if you want to do 10 push-ups with me at the end of the stream. And type yes in chat if you actually understand. Yeah, Miss Lloyd, I'm very excited for her. She's been all stressed out about that. And, as I've gotten to peer into this financial advisor industry, she's in a tough industry for sure, but, man, it's just so cringe. I mean, the requirements, she's having to, gorge out money just to prove that she's, if you saw the financial entry cost to being a financial advisor, you would not believe it. It's, upwards, it's close to $60K almost. Just to even get your license, just to get involved in the space. Not even, and you don't even have an income. You don't, until you have assets under management, you don't have an income. It's crazy. Can you be profitable solely as a macro trader? Absolutely. A lot of people that are into trading, they're interested in markets, but they're too busy around jobs. What I say to people is build the markets around your life, not your life around the markets. We have a lot of doctors, lawyers, people who are very busy in our Discord, especially that I've had the pleasure of meeting. We literally have surgeons in our Discord. These guys cannot sit here and day trade all day. So what they actually do is resort to more longer dated trades that they don't have to go to work worrying about all day, but rather can catch up on a lunch break or something like that if they need to do anything. But yes, macro is definitely a profitable way to trade. And if you don't have a lot of time during the day to trade, that's probably the best way to trade, is doing 1 to 2 month out positions or something like that. But that's it. Anyway, okay, so that's seasonals. So you guys understand that. Now, the next way I'm going to actually show you, again, is the PC ratio. So I know this is repetitive, but you guys need to know this. So the next way to actually spot this is understanding the PC ratio. So again, when we talk about the PC ratio, one of the best ways to spot a market top or bottom is imbalances. In any market, any given market at all, you guys have to understand that a market is either let me show this, okay? When it comes to win rate in the market, you have two options to trade in. At any given point in the market, there is always balance or there is an imbalance. And imbalances, these typically have the higher win percentage trades because an imbalance forces inaction. And not just an action, they both have actions, but a predictable action. Because if it's an imbalance, some people like Abstract, my moderator in this chat room, would have to, he's 400 kg. We would need a lot of human beings to get on the other side of that seesaw to balance it out. So it's predictable to see what they would do. When it's balanced, it's less predictable because, going back to that seesaw reference, if a seesaw is balanced and there's people on it, it's less predictable to say who's going to get on and off the seesaw and how to actually go forward. Okay? So that's kind of the reference I want to reference, is that if you have a seesaw, right, an imbalance is what you want to see because you know that the other side is going to have to get some people on it. All right? But that's what you guys want to see. So when it comes to imbalances and having tools to spot imbalances in the market, one of them is actually the PC, the put to call ratio. And so there's certain times in the market, like this right here, on Wednesday the 17th of January and the 17th of, oh, that's weird, the 17th of April. If you go back to SPY and you go to, what was that date? It was the 17th of January. If you go back to the 17th of January this year, what you'll notice is this literally marked the bottom. Rader, what? Rader, you mean you don't just post option alerts on your Twitter and say, I'm out, order filled. Wait. We need to add to the cinematic rant. Hold on. Guys, Rader, you don't just post alerts on your Twitter? Order filled. Guys, I'm in. Guys, I'm out. 4-cent gain. I just made $20. Order filled. Oh my, look at live trader. Trades on TikTok. Makes $1 million. Order filled. Guys, I'm getting out here. Order filled. Guys, I'm getting out here. Order filled.
Oh, hell no, man. What the fuck? Huh?
All right. That's enough of that. Order filled. Okay, so yes, that marked the bottom. So whenever you get some sort of major imbalance on the PC. Now, one of the most valuable pieces of information that you can get is these two things right here. Number one, between 0.89 and around 9.99, this range right here is when calls become extremely cheap. So when you're talking about a risk to reward standpoint, the more people, if a market, the options market is supply and demand, the hedge market is supply and demand, the equity market is supply and demand, everything is supply and demand. Now, I'm not going to go ultra economist on you, but what I'm saying is when something has more demand, the price goes up. So when there's a lot more calls coming into the market, or in this case, as it goes up, a lot more puts, that means from a pricing standpoint, calls are cheaper. So if calls are cheaper, that's actually the better side to trade from a risk reward, because not only is there an imbalance, but it's also cheaper. So the ranges, you can screenshot these ranges. If you're wondering what this golden line is, typically when you get some sort of cross of that golden line, you get a gap down under it and a cross back above, it marks a shorting period. But what I want you guys to really focus on right now, ignore that, it's just these two zones, above 0.89 and below 0.55. And again, that literally marked the top for the markets, was that August 20th. And if you go look at this again, even May 14th of this year, if we go back there, May 14th, if you look at this actually created, I know it looks like, a ton of calls, but if you see right after, this was right here, ton of calls were placed here. And what you'll notice is the next day we gapped up, but the better trade was actually short. That the shorting trade was actually the better one. Now you might go, Rader, that kept going up. You're wrong. But if you go look at things like, for say, like Google, and you go to May 14th, oh, I guess that just kept rocketing. But the better trade was to the downside. Okay, that's what I'm trying to tell you. All right, so that's how you can spot one. Econ missed. Guys, what's his bracelet say? Mustang! It's the color of my Mustang, guys. Mustang! Okay. All right. So that's that. So that's the put to call ratio. So hopefully you guys screenshotted that. All right. So we are on to only two more. Let's go. Now, this one's a quick one. But one way that you can actually spot a market bottom as well is, again, the OI. What you guys need to be monitoring as a trader is actually the open interest. Again, if you join the Discord, you will be able to see this because we literally have a chat here called bot search. And we pay for data in here for you guys to have this for free. So all you have to do is type in, let's go find the data. Here we go. Type in TROI, SPY. And then I think we have to put the expiration after. Hold on, yeah. So TROI, SPY, and then we'll do 820. We'll do 920. Okay, so once I paste that in there, you guys can see it literally, I type in a command, it brings up the data. Okay, so you have absolutely no excuse to why you can't get this data because it's in there. So this right here, it also saves you money. But this right here, you can see the put walls. They're around just under 450 for the SPY, et cetera, et cetera. Now, I don't know if I agree with that. What the hell? What are they smoking? Did I type something wrong? I don't know. I don't know what's going on with that. Anyway, so maybe it's just bugged, but I promise it works. Relax. As far as this right here, what you guys need to be paying attention to is the open interest. Over the last few weeks, we've been talking about that 520 bottom. In fact, in that Trader TV video I showed you guys, these walls will help tell you where support and resistance levels are. The more puts that are stacked on a level, especially you want to just be paying attention to the monthly. Don't look at the weekly. Look at the monthly expirations. You will be seeing where these walls get built. You guys have to understand that the more puts that are on a level, the more bullish you need to be on that level. Okay, it's a bigger wall. It means that markets are going to have to be forced to buy off of it. A lot of people just see a lot of big money puts and they just, oh guys, it's bearish. Look how much they put on puts. You guys don't understand how that works. Okay, so the more puts on a level, the bigger the level, and also the bigger the OI on calls, the bigger the resistance zone. Now I want to be very clear. The options market is never wrong. It is never wrong. It is impossible for the options market to be wrong in this case. Why? Because they are physically the ones building the levels. These guys, these whatever they are, market makers, firms, whoever, they're all building these walls. So when I say they're never wrong, I don't want you to say, well, it can't go below there. What I'm saying is every key level that is outlined by the options market is always going to be a level. Okay, so all this, oh, you didn't draw your fair, unfair value gap, ICT scammer mofo zone. Okay, you didn't draw that right. It's never a question of whether you drew it right. Like some people, they just don't know how to draw zones on charts. It's not about that. The options market will do that for you. They are legitimately never wrong. Just like how on my chart this week, I drew the expected range. There's a 70% chance every single week that this expected range right here, that price closes in between here. So it's always, this level here is always going to be a key level. Now, again, it can easily break higher, but it's always going to be a key level to say if this is a short, it's going to be here. Okay? So you have to understand that the options market will never fail to get a level correct. They are always correct in spotting the levels because they create them. Okay? So that's that. My children are sleeping. You're too loud. Okay, so with that being said, guys, only monitor the monthly expirations. You don't need to do this every day, but just have a good idea that 540 is a huge wall. To the call side, 565 and 570. These are two big areas to the upside that you'll likely see a good short opportunity off of. All right, moving on to the last one. Now, this one I don't talk about a lot, so you guys need to mention, you need to pay attention. One of the best leading indicators, sentiment indicators. Now, you guys have seen me talk about this a lot, but this chart right here is absolute garbage. If you see retail investors going, Rader, hold on, Rader. Wait, it's not dramatic enough. Hold on. Rader, did you check out the fear and greed index last week? It was at greedy. That means when people are greedy, I'm going to be fearful. And when others are fearful, I'm going to be greedy. I'm the smart one, yes. Be fearful when others are greedy. Okay, whoever came up with that saying, maybe, did you ever consider why they're greedy? Maybe they're the ones making money because they see the opportunity that you don't. Okay, so the point of this is, guys, CNN, Fear and Greed Index, it is, in my opinion, absolute dog water. In most cases, in most markets, And the reasoning behind that is it has no future leaning application. Okay. So when we look at something like, get this odd off my screen. When you look at something like this, it's not very good because, again, sentiment only matters in certain markets. And in this market, it absolutely does not matter as much. But what I tend to look at is actually the NAIM. So the NAIM number, this shows how firms are actually positioning in the market. And when I want to listen to someone, when I want to listen to a market sentiment, I want to listen to those that have money in the market. Remember there's yahoos that were commenting on my Twitter earlier? Those goblins, they're Raiders wrong by 2 days. Haha, we got them. So those guys, they don't have money in the markets. Okay? They aren't investing, they don't have trades active, they don't have positions open. So who I want to be listening to are those with positions in the markets. And that's what the NAIM is actually gauging here. So it's basically firms with positions in the market, and it shows their leverage. So leverage is a great measure of a market sentiment because the less leverage that's being used, the more leverage you have in the future to use. It's like ammunition. So when you have something like this, right? You came up here and you came to a peak and then you had this massive tick down. July 3rd, July 17th, not that bad, but then this right here, this big drop from the 31st to the 14th. This was a huge warning sign. And what we're looking for here is the between each update, how big of an update we had. So for example, on May 1st, we had a uptick of almost 30 points. That is very dramatic. From 61 all the way to 89, okay? Or 91 even. So 30 points. If you go to May 1st, and then you go to May 8th, if we go to those dates, so what you'll notice is a huge uptick in leverage came. We had not broken out from the high, but they're starting to use a lot more leverage now. And that is a bullish case. However, where you need to be cautious is when you start to see these, like from the highs especially, these huge downticks of leverage. Because what they're saying is they're deleveraging in the markets and the drops are to be supported less moving forward. I should have said that earlier. But that's it. Now, when it gets too low, you have to understand that when you do start to see those big surges come back in, they have a lot more ammunition to use. And so what we saw here was a huge downtick from the 7th to the 14th. And what you'll notice here on SPY was from the 7th to the 14th, which was right here, 7th to the 14th, they were actually deleveraging. So right here, they deleveraged, which means that it's going to be concerning. We probably don't want to be long in here because they're just absolutely wrecking their leverage. They're getting out. And so when you saw this, this was a sign that the markets were going to chop or to somewhat decline. Okay, so this is a leading indicator to spotting some of this stuff. Warren Buffett quote. Bro didn't even spell his last name right. Okay, so that's it. Now, everyone, that was a lot of talking. I'm going to film a YouTube video now since I wasn't recording any of this, and I'm going to go do it again. I don't feel like waiting for this stream to upload and having poor quality and, okay. So my life is amazing. I encourage every one of you to have that same mindset. Have a very positive mindset about your trials, your tribulations. They are here for a reason. Understand that when you pray for strength, that when you claim to be strong, I'm a religious man. You know, we got God on deck here. When God, or whoever you believe in, or whatever you believe in, understand that the trials and tribulations that come into your life, when you pray for strength, those are those challenges that give you strength. And so by you saying, well, I just want to have default strength as my character class, I mean, not everyone is genetically huge, but I'm kidding. But when you get to that, guys, understand that these challenges and things like that, they're there to make you better. So what I want every single one of you guys to do is to get up. Hold on. Get up and get down. We are doing our daily stream 10 push-ups, okay? So what I want you guys to do is understand this. Whether you are male or female, I want you to do 5 push-ups. But for you males, if you are male in this chat, understand that if you cannot convince yourself right now, when given the absolute no excuse opportunity to get up out of bed, get up out of wherever you're sitting, and do 10 push-ups, you will never beat a $70 trillion market. I promise you, and I put my soul on it. You will never beat a market of $70 trillion if you can't convince yourself to get down and do 10 push-ups. How do you expect to go do the research? How do you expect to go find edge in the market? How do you expect to think about things clearly if you cannot do 10 push-ups? The only excuse you have is if you are like my mod, who's 400 kg, who physically needs a hoist to get him off the ground. Okay? So unless if you're him and you need an absolute hoist to get off the ground, like a powered, pressurized hoist, then you have absolutely no excuse. But right now, 10 push-ups, let's get it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Look at that. Boom. Each day you do 10 push-ups, you will physically get stronger. Okay? There's now a crater in my bedroom. All right, guys. I am absolutely derailed. If you guys have not signed up for the Rader Report, please do so. I encourage you from the bottom of my heart. It's literally only $25 or $50. Go with the $50 one. The $50 gets you data that people literally charge hundreds of dollars for. They charge the seasonal stuff. And get this. I just bought a crazy API. My buddy and I were going to start coding in these crazy data indicators, like live data. But yeah, if you guys want to see my charts and trades, you want that market commentary, you want that. For those that are really committed, if you are actually serious about joining the Discord, like serious, understand 2 things. Number 1, we are not some alert Discord where you follow our trades. Do we post our trades? Do we post our entries? Yes. But where most of your time will be spent is within academic material, studying, talking to people, coming to the live calls, partaking in the lessons, taking notes. This is a performance sport. Trading is a performance sport. How do you expect to beat the markets if you're not training more than you play, right? Professional athletes, they play once a week and they train 5 days a week, 6 days a week, okay? It's that kind of commitment that gets you to trading. A lot of you get into trading because you want to make money. That's a poisonous mindset. You need to get into trading because you love it and you want to be better at it, not because you want to make money. If you want to make money, go work a job. That's how you get money. But don't get into trading with this mindset of, he's got the best alerts. No. Do I show my trades on the Rader Report? Yes. Do majority of them work out? Yes. But what I'm saying is, most of the time, regardless, each one of these sources are data streams to your brain that you need to absorb this information. Do not join my Discord if you're going to just copy alerts. Please. I will literally, if that's all you do, and I don't see any academic progress like that, or any attempt to even get better at trading, or you're getting that headspace more right, we've literally banned people before. Okay? We've banned people who just sit there and because it's toxic. We don't want that. Okay? So if you are actually serious about that, DM me on Instagram and I will send you a 50% off code. Okay? Because again, I don't want you to be burdened by the cost, but I don't want you to be, why is it that everyone turns down a Costco free sample when they're there? I mean, unless if you're abstract, you probably swallow the entire employee. But when you're at a grocery store, you walk by a free sample. No, thank you. But when they're charging for food, you'll buy it. Oh, I'm hungry. Let's go get Starbucks. But when they're giving out free samples, you pass right by it. So, you know what I mean? It's just that kind of mindset, guys. Okay? So that's all I got to say tonight. You guys know that. But other than that, guys, have a wonderful rest of your night. Seriously. Take it easy. Get some water. Go make sure you guys are taking care of your health. One of the biggest things, I will say this. I'm a senior on online college. I actually graduate this December, I think. I've been doing online school throughout college and like as my college. And one thing I've learned, so where I actually moved, I'm actually 5 miles away from the university that I actually go to. And it's the University of Cincinnati. Where I actually moved here, I see like all the frat parties when I'm driving around, like, which is crazy. But beyond me. When I was driving to the Mexican joint, I didn't bring the Mustang to where I moved yet because I can't find a good place to park. That shit's gonna get stolen. But as far as that stuff, I'm seeing kids my age, adults even, go to these stupid ass parties. Yo, Thirsty Thursday. They were calling today Thirsty Thursday. They were yelling at me, well, not me, but across the street at another person to come join their Thirsty Thursday party. And these girls were in the skimpiest, basically not clothes. Do not be those people. Clean your body out. Don't stop drinking. Stop smoking. Your body is your temple. The better you treat it, the better results you're going to get from life. Okay? You only got one body. I don't know how else to say this. You only got one body. You can't regrow limbs. You can't regrow your organs. So why not treat them the best you can? Okay? I have never to this day drank. The only time I ever had alcohol was when a waitress bought me in New Zealand. She brought me the wrong drink when I ordered another one. And oh boy, did that not go well. Okay. But other than that, I think God forgives me for that one because it was not my fault. I was like chugging it. It was a mocktail. It was supposed to be pineapple juice and like mango, and I go. I'm like, yeah. Anyway, clean out your body, treat it correctly. Have a great night, guys. Bye bye.